Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We've got pretty massive non-farms payroll here this morning. I'm just gonna go the charts really fast here, but we don't really got a whole lot. Treasury's recovering from yesterday's shellacking a little bit. Yes. Having a rally into the close. Oil kind of sideways. Let's make sure we're at the back of that. Oil kind of, oh, sorry, that's ES oil here. Gold hurting, man. Kappa hurting. So, consensus forecast is basically 300. It's 295. Goldman's predicting 350. I think probably 350, but this piece of news is always like very, very difficult to call. So it could be anything. It is a very illiquid market here. Very slippery. But that means that there are people taking trades on it, positioning themselves for the move. I'm sneezing here. All right. What the heck is this? Wow. Somebody tried to shoot Argentina's vice president and it was tackled. Okay. Economists almost evenly divided on 75 basis point hike from the ECB next week, says Forex Live. Okay. I thought that they were almost all going to 75 basis points, but I guess I'm wrong about that. From the Hill, the memo, midterm shape up as a proxy war between Biden and Trump. It is kind of seeming like that's what it's turning into. Here we go. They buying into this, huh? Ooh, okay, it must be bad. Oh no, it's not bad. It's 315. Average earnings is spot 3. That's gonna push rates down. It's too fast for me to even click. Okay, so again, average hourly earnings ticked down. Where is it? Okay, unemployment ticked up 3.7 versus 3.5. That's really good. Non-farms, the headline number, not too significant, 315 versus 298. And then average hourly earnings was spot 3 versus spot 4. So I can't take a trade over here in the micro tens, but we're gonna try and play it from a sim on the treasuries, main treasury. Take one off there. I'll take one off there. Oh wait, what am I doing? Why am I going short the treasury? That was just dumb luck there. Maybe it will be a 50 basis point hike from the treasury. So the non-farm payrolls was a little bit better than expected. I anticipated they would be better than expected, but the average hourly earnings ticking down and the unemployment rate ticking up, that's really good for equities. Like oh yeah, and equities are really rallying on this, right? Yeah, this is like buy all the things, man. Well, the liquidity over here is pretty iffy, but since we're still in a very illiquid market, I'm not going to add here. That's very interesting. We like this one. So, the dollar's doing some crazy stuff right now, right? The spread you're paying for here in the micros is pretty nasty. I don't like that. Nobody's trading it. Yeah, they're gonna react to that. Tried putting an aurora out there, but I just barely missed picking him off. We're getting steepening. Seems like maybe we are. Spread came in there a little bit. Okay. Well, I wasn't the only one that saw that, but it didn't take, did it? It's interesting here to see that the S&P 500 is just taking off of the news, presumably because that means that the Federal Reserve won't be as aggressive with rates. But the treasuries are still holding back a little bit. It may just be because they just don't have it. We're in a very illiquid area, and I'm not really actually seeing super strong volume come through on this. I've only seen about 5,000 contracts net to the long side in the treasury so far. Right, that's a little weird. It may be though because of currencies more. It does seem that the dollar and the Japanese yen are following the action in the treasury very closely. Looks like I could have gotten a better price. Hmm. Well, of course, the headline number being at 300 isn't good, but it is in line. But everything else about this report, I would say, is about as good as things could possibly go for the market. So, yeah, okay. So Manu Squawk pointing out that the traders are still pricing in 75 basis point hike. The thing though is with the news that we got there, one has to wonder if the CPI next week will actually be good, right? I am seeing here the spreads steepened. At the moment, I'm getting selling in the 30-year. It's kind of more flat in the 10 and the 5. So this pull back down here could be the 30-year dragging them down lower. Some iceberging. Ouch, that down tick at 03.5 looked a little heavy. Ouch. Some absorption there, 02.5, but the treasuries are having a hard time holding a bid. Not what I anticipated at all. This flow is starting to contradict what I would expect to see happen. The S&P 500 is pulling back now from its initial move up. I don't know. So is this just, you know, ranging within the liquidity hole and this movement isn't necessarily significant? Or are the treasuries saying that news really wasn't actually good? Or is it manipulated? Somebody has a short on and they want to see it make money? I don't know. But that was just a new low in the 10-year, man. That's man. There is some absorption down there, but man. Man, oh man, oh man. Okay, well, it's pulling back a little bit. So there was some big orders there and they kind of backed off, but then it's still kind of chilling there. Like the way that this is all played out, somebody has to be making a contrarian trade here, don't you think? I should also note that, you know, I said it looks like we're steepening and that the 30-year is dragging us down lower, but then the 10-year got dragged. The 5 and the 10 just got absolutely crushed. So in the end, it actually flattened. Well, that right there is a little bit more encouraging of a pullback. I guess one of the risks that you'd have to face if you were in a short here is that, you know, you kind of get like the stop run move and then like that might be it because it is a holiday weekend. You're just gonna make coffee for now. I'm a little surprised by this action so far. It ain't over, but I don't know what to make of that move. Could have just been a freak move. There could be people that need to sell it and it has nothing to do with what the news was, right? Could just be the holiday weekend and currency flows. $6J is lower too, like that doesn't make sense. Easier takes on the downside. Somebody is painting the tape here because, yeah, as soon as they were starting to come back up, and then here comes a large order trying to smash it. Although that's holding iceberg at 29.5, so that large order at 30 is a little suspicious. It's not pulling per se, but. Yeah, it did trade 1394. Well, there was 1800 on there at one point though, right? Like somebody did dump 500 lots on there, maybe so that they could get their iceberg filled. Okay. Well, another tick or two to the upside, and that will certainly help the chart, at least. Do you see value in the DOM pull/stock column? Oh yeah, so I think that there is value in it. It's not necessary though. I think there's value in it. It's not necessary, and I just don't have enough room on my screen for all of that, you know? If I was just trading by myself and I didn't care about people being able to read the numbers, you know, and I could make the fonts a lot smaller and probably make room for it, and maybe I would have it up. But I've found that I'm pretty okay at seeing it on my own. So, you know, it was kind of a personal preference thing as to whether or not you feel like you have a hard time seeing that. Jacob, interesting reaction, maybe because they're saying, well, yeah, but it's still going to be a 75 basis point hike. That's a really good question, Jacob, because this news definitely has me going, I'm not so sure that it will be 75 basis points anymore. I mean, the CPI is going to be really important, right? But what I'm seeing is kind of suggesting that CPI won't be so bad. And I have been a little quiet because I am just a little bit like unsure what's going on here. Let's just be careful trying to make a conclusion that this means something more fundamental. Okay, right away. You know, for starters, this could flip around and they could go right back up to the highs into treasuries. That's entirely possible. It could be a move based more on liquidity and positioning than it does somebody betting on a play. And it could be somebody betting on a play that is just wrong. I'm hearing some comments on Twitter from Japanese finance ministers talking about the oil price cap. So there's this whole thing about we're not going to allow you to buy oil from Russia that's too far below market price. But they're also talking about the currency could be causing some movement in the yen. And we did see a little bit of a buy there in the yen. I don't understand what the details on the ban is. To be clear, isn't that a price floor? Maybe I'm wrong that it's like it's the other way around. I haven't seen a whole lot of details about it. We must quickly implement the G7 agreed Russian oil price cap. Well, they've come back up above this 116 area, but it's still kind of ranging, and when it sells again, I see like sellers come in and dash bids, and the bids just run for the hills. That's really, really unusual. I'm also, well, I did see a decent pullback in the 30-year in terms of cumulative delta, not in the 10-year. It's still, the 10-year is just flat, volume-wise. So it's the limit orders pulling, it seems to me, that is moving price right now. Well, they are able to bring it back up to the top of the range, although I don't really feel like it's quite as aggressive. I don't know. I don't think that I'm seeing anything that like too heavily contradicts a return back to where we were, but I guess it's not really giving us a whole lot to go off of at the moment. The S&P 500 did have a little bit of an ugly pullback there for a moment, but is now continuing up. And the rally in the Japanese yen. Well, maybe they're not done. I don't want to speak too soon. I don't know. It's kind of unusual. I've seen a lot lately where like you get the non-farms. It seems like it's a big deal, and then it happens. You get the gut check reactions, of course, but then the way that it goes in the end confuses me, and that's happened a lot this year. And I really do wonder what's going on. I feel like that there's like these traders out here that just trade the opposite of what it's supposed to go. Just to mess with everybody. Well, the 5-year is pushing there a little bit. It looks like some steepening is coming back in. That's curious. Watch the RTH in equities. Well, equities sure do like to do that gap close sort of a thing, right? This is kind of an unusual situation though, so when bigger players step in, that may be. It does seem to me right now in the treasuries that I'm not seeing a like really big boys stepping in here, are we? This feels more like trading in an illiquid range. I've seen a few icebergs, but they're tiny. You know, 1200 isn't that big. Yeah, the labor force expanded by roughly 800,000 people. 442,000 people reported being employed, and 315,000 jobs were added by businesses. Unemployment ticked up as the labor market wasn't able to fully absorb the swell of entrants. Wage growth slowed. This is what a soft landing looks like, says Betsy Stevenson, being retweeted by FX Macro. I think that is the perfect recap of what I'm seeing here. Is like you couldn't have had a better set of numbers. It's almost a little suspicious, to be honest with you. What is Zero Hedge going to be saying about this, huh? Guess we do get data at the top of the hour here. What is it? Oh, Singapore manufacturing PMI. We still get factory orders month over month at 10 o'clock. So we have that to work with too. Let's see here. With Goldman warning ahead of today's payrolls print that an inline print of 300,000 will keep pressure on this tape. Moments ago, the BLS reported that, as expected in the somewhat negative case, August payrolls indeed came 300-ish, or 115K specifically, dropping from a downward revised 528K in July and just above the 298K consensus estimate. After all of last year's data revisions, this was the lowest monthly increase since April of 2021. The non-farm employment has risen by 5.8 million over the past 12 months as the labor market continued to recover from the job losses of the pandemic-induced recession. This growth brings total non-farm employment to 240,000, higher than its pre-pandemic level in February of 2020. Also of note is the change in the total non-farm employment for June was revised sharply lower by 105,000 from 398 to 293. Okay. So that number last month that I said I didn't believe was in fact way off. The unemployment change for July was revised down by 2,000. With these revisions, employment in June and July combined is 107,000 lower than previously reported. Okay, so those revisions, now that is an important piece of information that I missed before. The revisions were probably more significant than the headline number because they revised things down 100,000. In any case, with headline rate coming in on top of Goldman's negative boogie, why are futures surging pre-market? Two reasons. First, the unemployment rate came in well above expected, printing at 3.7%, missing expectations of 3.5%, and above last month's 3.5 print, as the number of unemployed persons increased by 344,000 to 6 million. Among the major worker groups, the unemployment rates for adult men and Hispanic rose in August. The jobless rates for adult women, teenagers, whites, blacks, Asians showed little change over the month. Another reason for the rise in the unemployment rate, the participation rate rose more than expected, printing 62.4 in August, above the 62.2 expected and up from 62.1 last month. The second reason for the spike in futures is because hourly earnings slowed again and rose 3% in August, below the spot 4 expected and down notably from July's upwardly revised spot 5. On an annual basis, average hourly earnings rose 5.2%, also below the 5.3 expected. Some details. In August, average hourly earnings for all employees on private non-farm payrolls rose by 10 cents or 0.3% to 32.36 over the last 12 months. Average hourly earnings have increased by 5.2% in August. Average hourly earnings of private sector production and non-supervisory employees rose by 10 cents or 0.4% to 27.68. The average work week for all employees on a private non-farms payrolls decreased by 0.1 hour to 34.5 hours in August. In manufacturing, the average work week for all employees was a little change at 40.3 hours, blah, 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 blah. In other words, solid headlines, payroll number, but weakness in the unemployment rate and another much needed tapering in wagon growth. Still, it's hard to see this report taking a 75 basis point hike off the table for September 21st. As such, the CPI report out on September 13th will likely be the decider when it comes to 50 versus 75. Agreed. I think that the 75 basis point hike is less likely now, but still on the table. And ultimately, CPI will be more important. Okay, what was that? Wow. Okay, so that right there might have been somebody stopping out. There might have been somebody that went short and is bailing. That was a change in Delta. This rally so far flat in the treasuries on cumulative Delta, but accelerating cumulative Delta there on that last little leg that got us back to above 0.7. So I don't know. This is one of the wildest non-farms I've seen in a long time, and we've seen a lot of crazy non-farms, but this one is like incredibly confusing and uncertain. Any thoughts on Shop? Are you talking about the stock? I don't like to give opinions on individual stocks, right? Instead, my thing is really more the macroeconomics and the interest rates. So it seems to me that right here, what we're getting is favorable towards a soft landing and is maybe even favorable to lower rates. So Shop is a tech company, right? They're a growth company, Shopify. Yeah. So I think that what we got here, probably a positive for Shopify. It does look like they're taking a decent jump in the overnight. Nothing too crazy, but a little bit of a jump, but I can't speak anything to, you know, what the company's current situation is, what their future earnings will look like, or anything like that. I would also note that I'm not a fan of technical analysis, especially not on short time frames. So I'm not going to go and like look at a chart and say, here's what a chart says that could happen or whatever. Listen, if you come over here, I'm going to teach you much more useful things. I can prove to you that the market is more statistically efficient than it is informationally efficient, meaning that it's hard to pull a whole lot of information from just looking at a chart that will actually be predictive, but that there's also a lot of information that's out there that's not fully reflected in price. That's something that I think is pretty firmly proven empirically at this point. And I think you learn the mentality and the approach. Excellence, integrity, teamwork, those are important qualities here. You want to be a trader. Especially excellence. The world just doesn't appreciate excellence anymore. Well, that came all the way back. Came all the way back, but there is a little bit of resistance to getting back above 10. What's this about nuclear reactors? Ian Shepherdson, hard to imagine the Fed being unhappy with this one. I agree. Anyways, and then the order flow. And when you have all of those things together and you trade the treasuries for a little while, you learn all that stuff, and then you turn around and you do it on stocks. I don't like to trade stocks just because I usually don't have information for stocks, and I don't really research in that direction. I know treasuries. But if that's your thing, I experience it again here, you go back over there, it'll be like taking candy from a baby. It's a lot easier. Morning, Tobias. Good morning, Vibe. I'm betting Tobias is going to come in and tell us that he took some really big risky bet again. Went long the S&P 500 and made money. Oh, actually, no, he's been kind of bearish, so maybe he didn't. Maybe he didn't. I don't know. This whole move has just been okay. Okay, there you go. They're higher. Whatever. So this dubstep playlist is a lot harder than I thought it would be. Are you guys doing okay over there, or is it too much? I'm into it. I'm into it. I mean, of course I'm into it because that has to be one of the most stressful things I've done in a long time. Sitting here being like, no, this doesn't make sense. This doesn't make sense. The flow that I'm seeing isn't telling me that it's not going to flip. It's not. I think that my original thesis is still intact. But oh man, I'm taking like crazy excursion. Want to celebrate with you. I don't think I'm in the clear yet, but whew. That was stressful. Could you tell how nervous I was? Could you tell how nervous I was? I'm still nervous. I've only made $5. Still nervous. I'm kind of wondering here though, are we gonna see stops to the upside now? Your short yield and long the euro. Bravo, sir. I do still feel a little bit like of a sinking feeling in my stomach, just because I really hated the position that I got. There were points where I was looking at like 2.26, 0.27, and then gave up on it. And I could have waited. The thing is that if I had waited and I'd watched that whole thing, I would just been like throwing my hands up in the air, been like, okay, whatever, and like decided to just not trade it, right? Well, I haven't seen, at least not since the 07. At the 07, there was a stop run, right? I haven't seen more stops since then. The delta is actually still a little bit flat through here. And what I am seeing is still a very fractured market with damaged liquidity. The pullbacks are pretty deep, right? Well, they're not. Pullbacks are actually more shallow than they've been. Like 4 ticks back is actually relatively good. I guess, though, there's still evidence of it kind of being illiquid, because when it does come back, it comes back quickly. Man. Kill me. Kill me. You ever watch that old movie The Fly? Neither have I, but you know, I've seen that one section of it a million times in popular media, so. Okay. I got my fill on my sim. You know what, here's the funny thing with the sim order. Was that initially I came out and I sold it. Completely on accident. I said, well, that's good, but I sold it. I said, that's good, that'll probably lower yields, but then I sold the treasury. and I was like, oh wait, that's wrong. And so I took profit on that, and then I flipped around the other way, and well, I held through like 21 ticks of adverse excursions. So that's listen, this is a terrible trade. This is a terrible trade right here, but it is working out. I guess the one thing is that if this really runs on the other side and we're able to get some out of it, it might turn a really bad trade into a really good trade. So let's just see. Not quite there. They're trading a little bit more here at the top, though. Like the amounts that it's taking to clear is better than it was at the bottom. At the bottom, it was like they'd hit it 200, 200, 100. You know, now up here we're getting 700, 500s. So liquidity is stronger. Market orders are stronger. I'm still haven't seen a decisive breakout in cumulative delta, but it does look like cumulative delta is rising through here. We'll see if they break the high. We'll see if they break the high if we get stops or people flipping around. Although I suspect that the real stops stopped out at break even, which was probably around that 07. The price cut for Russian oil is one of the most important tools that we have to fight inflation. Well, so if we believe Janet Yellen, then that's another thing that would help us lower rates, right? You would think that that would be something that would put pressure on the oil to the downside, but I'm not seeing that. They don't seem to care. So maybe I shouldn't care. I am seeing a jump in Bitcoin. So that's interesting. There's an iceberg beneath us at 12.5. So, you know, on a move like this, I would expect to see like some iceberging at like 13, 13.5, 14, somewhere in there on like a level break trade sort of a thing. 12.5 of it is a little bit too early. I don't know if that matters or not. I've never kind of noticed something like that before. It looks like it's a relatively big one too. That could be a level break setup. Well, let's see. I think that so level break setup is like if it's a trend day, if we're in a strong trend, it works every time. If we're not, it's a 50-50. So can we say that we're in a strong trend day? Well, I mean, we've been in a strong trend since well, for the last 30 minutes. I'm not going to call today a trend day, so I think I'm going to have to say that this is still a 50-50. But the iceberg did get filled. They fell through him a little bit. It looks like they're going to take it back bid again. We'll see if they smash it to the upside or not. And what are we seeing in the currencies? Japanese yen recovered there. Well, while the treasuries are almost to their highs, the Japanese yen still has a ways to go to get back to their highs that happened like just as the news hit. So I'm trying to stay focused on this trade here, but I'm seeing all sorts of stuff on Twitter about Joe Biden's speech last night. Did any of you guys watch Joe Biden's speech last night? I didn't watch it. I don't know. I used to be really engaged in that sort of a thing, but these days I kind of feel like, he's not going to say anything that moves the markets or matters. I probably should be working harder to be more engaged in what's going on in the politics, but I didn't watch it. But what did any of you guys watch it or read the reactions? What did you think? Here's a good little take right there. Remember, the iceberg was 12.5. This move up still smells a bit fishy to me. Let's see what would move up in equities or in the treasuries. I kind of feel what you're saying. I wouldn't say it quite that way. Like, I don't think that the move up smells fishy. I think that the move up is exactly what should be happening given the news that we had. But the way that it has been trading does seem a little fishy, doesn't it? Like, it's doing what it's supposed to, but it's doing it in kind of a weird way. I think that may just mean that this isn't, you know, so many of the big moves that we've had on like non-farms and stuff have just kind of been like one-way things. And like all of the markets immediately chose the direction that they wanted to go, like right off the bat. And this time it was a little bit different, right? We had treasuries kind of went the wrong way and had a really ugly excursion on the other side first. So we may just be detecting that. Okay, well, that was a break, I believe. No, it was equal to it. 14 is equal to it. I'm not seeing like a clear level break stop run yet though. A little bit of liquidity at 16. So this one at 16 we probably need to pay attention to a little bit more. Normally I would say, yeah, you should expect to see a lot of liquidity at the 16. Of course. but there's a little bit more at 15.5 too, and it's just a little bit beyond, you know, the high and everything. So it does kind of look to me like could be some profit taking in this area, and we're getting some icebergs at 14.5. So there's a couple of things kind of suggesting to me that these prices do have some interest in them that might be a little difficult to get through. But the way that they brought it up here, these bulls probably have plenty of ammunition to, you know, get their fills if it's that close. Oh my gosh. So yesterday Joe Biden had a speech where he kind of railed against Trump supporters basically. And people were making fun of the speech because the background was red and he was kind of looked a little angry in some of the screen. You know, people found screenshots that make him look angry. If you watch me talk, you'll always be able to find screens where I look angry. Anyways, and so now people are saying that he looks like, you know, a certain leader from that evil leader from the past. I'm kind of hesitant to even use the words because I think that those words historically would get your videos flagged and throttled. But oh man, it's like all over the place. So like the left was going crazy with the dark Brandon memes yesterday, and now the Republicans are jumping on it. And okay, so this move here is starting to take off. In the 5-year in particular, that run looks spectacular. So if I'm coming back over here to the, oh wow, okay. So yesterday's high was 116.17.5. That's where we're at right now, and is probably why there's liquidity at 18. So if we bust through 18 now, and we're starting to, then from there we have single prints all the way up to, well, we've got some single prints up to 23.5. And then some single prints up to 28.5. Wow. Interesting. And what are we looking like on cumulative delta? Net 10,000 contracts through all of this? Oh man. Well, so we got to be careful because sometimes you get this thing where like it really starts to look, well, oh man, it goes both ways on holidays. Sometimes on holidays, it's like, oh, it's getting really, really strong, and then it fizzles out really quickly, and all the traders take their profits and go home. And sometimes I've found myself where I'm taking late trades and kind of find myself stuck, right? But we've also very, very many times recently, before holidays, we've seen really strong trends going into the holiday weekend, haven't we? And the way that this news is working out and the way that this tape is working out, I think that trend action is more possible. I'm not going to say that it's more likely than not, but I'm going to say that it's more likely than it normally would be. And we are seeing quite significant steepening through the move. Wow, in fact, the steepening here takes us to the steepest level since like July 12th. So that's pretty important. What does it look like in the, wow, yeah, in the 30 and 10. So the 30 and 10 like flattened a ton at the beginning of the week or end of last week. So they're still not to, like, if you know, stop out levels in the 30 and 10 spread. Maybe why we're getting a little bit of flattening in here. Looks like that somebody's come in for their mean reversion trade, right? still trading decent amount of volume here on the pullback. That's very curious. But again, the change in cumulative delta is only about 10,000 contracts net. And on a day like today, I would expect to see more like 20s, 30s, right? So is there more room for upside? Yeah. At the moment, it looks like they're falling back through this liquidity hole that they formed when they shoved through 16, though. You see that? It's once again, there are some places where there's volume, but like that last uptick was only 218 lots. Got about 5 minutes to the open. Now, the open in the ES is probably going to be really curious, right? Because again, they like to do that gap fill sort of a thing. But I also feel like this is a situation where you just kind of want to gap and let it go. Yeah. Well, or rather, let me say it this way. This seems like the kind of situation here. I'll move I'll move this up here so we can see it a little better. This kind of seems to me like the kind of situation where you might see a lot of buy on open orders. So you might see a big positive change in cumulative delta on the open. It should be, let's be careful here in the treasuries because that was a pretty wild move up in there. It being a holiday, sometimes that's all there is to it. There's factory orders, right? Pantheon macro in one line job gains are moderating participation rising. The chance of 50 basis points this month just increased. A negative CPI print in 2 weeks could seal the deal. Well, I don't think that you'd get a negative CPI print, but you might get one that's just in line or maybe 0.1 lower. Okay, so them coming back to 13 is not necessarily what you want to see as a bull, right? So remember that the kind of the iceberging that started that whole rush higher was 12.5. So they went all the way back to the scene of the crime. One minute to the open. tell that they had a little bit of a rise there, but then they come back. It does look like that they're going to form a range here between 13 and 16. That or they're just going to careen back down to the lows. Oh, I hope not. Okay, so market on open. The first move is a sell. So that I was saying maybe you just buy in here. Looks like that's not the case, at least not for the first minute. If the big guys want to sell, they should do it on opens like this in the indices. They might also push it straight up. Yeah, it looks to me like the buy on open theory is dead. So now we'll see if the S&P 500 retraces or not. How much did I get through here? I should have taken it off at 23.0. See, that kind of looks to me like I'm getting some profit taking here. Iceberging at 11. Well, I'm not entirely sure what to make of that flow below 12.5, but at the moment, it looks to me like we're still in a fairly illiquid area. I think there's a really good chance that we have another small rotation up and that we start to try and find an area to settle down somewhere around 16. The change in cumulative delta, though, net here in the treasury is still quite flat. There was definitely some activity up in here, but the tape is not giving me clear signs of like large meta orders to make me be like, okay, we wait until next time and then we'll see another move up to the highs again or something like that. No, I'm not getting that. It looks like trading to me. Well, there's some decently aggressive takes on the buy side there. I think your record is stuck. What do you mean by that? Think that the song is the song I've already listened to them all? No, we're not through it all the way. Where are we at right now? Oh, I'm to the end of the playlist, so we do have to find something different. Well, should we go to ambient and like the exact opposite here and like just try and relax? Can you hear it when I breathe in? It's like I've been traumatized today. I feel a little beaten up. Feel a little beaten up, and we haven't even really gotten into the Dark Brandon thing yet. How do we do this? Can we do a poll on this somehow? I'll make a really ambiguous question and you guys can't answer it. There we go. I'll just say Dark Brandon and you can vote yes or no. Okay, a little bit of enough rice for get at 13 stopping, and then the 12 pulls. Ugh. Yeah, that's not. Well, okay, that last tick was a little bit better, but I don't like the liquidity at 12. Yeah, and 12 haven't done take anything either. And then 12 balls again. Ah. That sucks. Biden just commenting that the U.S. labor market looks strong. I think I got change in my pocket going jingle jingle. No, it isn't it? It's my money doesn't jingle jingle, it folds. Ah, see now when I say it like that, now you're like, oh, I get it. It's because I don't have change in my pocket. I have dollar bills. You get it? He's saying he's loaded. That one died down really quickly, didn't it? I remember on TikTok that was like the thing. But you know what happened? Is TikTok changed the algorithm to not favor viral trending sounds as much. TikTok is basically saying like, oh, people are starting to use this as a search engine. So really, we should start to prioritize content that answers questions and search and stuff like that. So it's really changing. It's really, really changing. And I still think that TikTok is going to do this turnaround thing eventually where you can sell stuff through their platform. Like it'll be like, I'll be able to go live on TikTok and you can buy my indicator package right there through TikTok, because they're always like really throttle you if you do anything to say like, check my profile and all of that sort of stuff, right? And it's because they want you to sell through the app. Right. So they changed that, and then that jingle jangle song just like disappeared. Okay, well, 14's not so bad. It took a decent little push to get there. So what do I think now? Now that we've had all of that, not so sure. Hey, somebody liked my post and retweeted it. Me responding to Futures Trader 71. So let me read again what Futures Trader 71 said. 22 years ago when I started trading, it took me a long time to accept that what the market does is not directly representative of the economy. Again and again, I see traders pissed that the indexes are doing something contrary to whatever macro news there is. So I wonder which side they're pissed about, right? Is it that they think that the economy should be declining? They were short, and now you got this big rally in the S&P 500, and so they're bummed about that? Or was it the treasuries? Because like in the S&P 500, it's doing exactly what I would have expected it to do here, right? But the treasuries did all sorts of weird and crazy things, didn't they? Here in the treasury, when I look at the longer term chart, I think I can make a pretty convincing case that an extension beyond 18.5 could result in a lot more excursion here. But they turned there for now and are kind of settling in here in this kind of liquidity hole that we've formed. That might just be it for today. That may just be it. Maybe it, and then next week they break through it and we get a little bit of realignment in the markets, let's call it. Could be one of those sell the good news. That's true too, Tobias, actually. It's a really good point. Like it could be that the economy is still looking bad here and you still want to sell it, and today is a sell the pop sort of a day. That doesn't mean that like the day will end lower, but like, you know, on a longer tactical perspective, good place to sell. Perhaps. So here's how I would look at this, tactically speaking. Okay. The equity markets are too short. There is still a lot of negative sentiment. Yes, September and October does tend historically to be a bad time period for stocks, but like all the CTAs went short and are already short. So the risk is stop runs to the long side. That's probably a part of the action that we're seeing today, right? So you get those sorts of situations where there's a systemic short. It doesn't take very much to push them to the upside. And so you kind of get this situation where traders think that, oh yeah, the economy is going terrible. All I got to do is sell this and just try and hold it, right? And that trade never works out. Even if you're right, even if it does go lower, you just keep getting stopped out of it over and over again. Why? Because too many people are short, right? So I would keep that in mind if that's the way that you're playing the market. Okay. Well, when I look at this, it's kind of tepid at 15. Don't know where it's going to go from here. Maybe they go up for the highs again. It does kind of look like, well, how long has it been? 20 minutes? I don't know. But the 30-year, when you look at the 30-year, it's like, wow. Are they gonna drag us higher? The 5-year, well, so, and the other thing is that it's still steepening. It's still steepening. And this steepening flow that we've seen through all of this is pretty persistent. So so let's kind of, I'm having a hard time keeping track of things here. So this was kind of a spot where I was kind of saying, well, I don't know if we'll get back there. So if I do get back there, maybe I want it. But the order flow is not saying they're done. The order flow is just starting to get aggressive again. You know? Well, it's starting to get aggressive again, but they did not pop above 16 and hold it, so. And there does appear to be a bit of a hole at 15.5. Not because nobody wants to trade it, but in fact, there was people taking orders on both sides quite aggressively, so. 5-year drop there a little bit. The spread coming back in a little bit. Not a break of the trend yet, but what are we seeing in the Japanese yen? Haven't checked in on them in a while. Japanese yen kind of doing the same thing, kind of settling in a hole here. Yeah. The liquidity looks awfully skittish. Like every time that it ticks, I see big changes on the inside. And like, if it were to tick up at 15, I'm going to bet you that not a whole lot trade. And that a lot of that pulls and it happens very quickly. Okay, iceberg, bid iceberg, 14.5. Oh, you know what? I totally forgot that I had this sim position on. What should I have done with this sim position? I probably should have taken some of it off at 16. I guess I'll leave an order up there just in case. Jeremy Grantham warned Super Bubble in stock says yes to burst. Well, I think he has said this. I kind of wonder. I wish that I had the experience going back into the 70s and 80s, because were these kinds of guys as active and as influential in the market back in the 70s and 80s? Because ever since I've been in the market, there always seems to be somebody predicting doom that never happens. I don't know. Listen, here's if the stock market pulls off the soft landing, that's gonna, like, you have any idea how many people are gonna be wrong if they pull it off? Because practically almost everybody was betting against them. Like, practically everyone was betting against them. You know? It's pretty crazy to think about. Still there? There we go. Well, they were at the bottom of the range. They came back to the top of the range very quickly. It looks like they might push it another tick further and keep the uptrend intact, but hasn't quite done it yet. Oh, I can't take it anymore. I have to talk about those politics, guys. So, let me tell you something. I feel very strongly the thing that occupies my mind so much these days is that I feel that there are very key values in this society that are not being valued anymore, that are kind of being brushed aside for you know, political reasons and so forth. And they just happen to align with the things that I remember learning when I worked for the bank. Integrity, excellence, and teamwork. So we've talked a lot about excellence. Teamwork is maybe the one that I know the least about, to be honest with you. It doesn't mean that I'm not a good team player. It's just that I know that there's a lot of advanced knowledge out there about how to best work in teams and stuff, and I've never studied that, right? But I'll tell you what I'm seeing in politics right now, that's not teamwork. So Brandon, Dark Brandon coming out, giving the Hellfire speech, attacking half of the country here, basically. That's not teamwork. But then I come over and I look at how is the right responding to that? And they're joking about, like, if you're reading this right now, you're part of the resistance. That is not teamwork either. That is not teamwork either. Guys, the key here is, yeah, maybe you are adversaries in some extent, but we're also teammates to some extent. And the question is, how do we understand these people? How do we understand how they work and how we can bring them over into a place where we can work as together as a team and accomplish things? And right now, everybody seems to be interested in just trying to bury the other side. I find it very deeply disturbing. Well, you know, they did this poll the other day. What are you most concerned about? And like, there were more people concerned about democracy and, you know, people being against each other than they were about rising prices. And that's, I think is so wrong, because that might be the thing that you read in the media and on social media, but I really don't think that that is the situation. That was a stop run. Wow, wow, wow. That was a quite a stop run. So again, 18 is a really key level. So now that the treasuries have pulled back and broken through it, that really solidifies the uptrend. That really, really strongly solidifies the uptrend. And again, they have positions going all the way back to, like 22. Here, I'll try and show you here on the chart. These are just benchmarks. I'm not saying that these are places that are likely to get to or anything. But if we go back 2 days ago, right, there was that move down 23.5, right? So this was a break of yesterday's high. So now you got 23.5 and then 28.5 are two key positions that they could try and push through. Well, considering Jeremy Grantham is British and the FTSE 100 is pretty much where it was in the late 90s, he gets a pass for calling. Okay, that's true. You got a good point, actually. But the situation in the United States is way different than the situation in Europe. It's quite I want the right adjective here, man. To me, it's kind of beautiful to see how the macroeconomics play out in different countries. I know that that's, because for some people it's not good. For some people it's not good. But to me, to watch the dynamics play out is really interesting and beautiful. It's also really funny how it always seems to play out in the Americans' favor, isn't it? It kind of makes me wonder how much of it is actually just a coincidence. Because my whole life, everybody is always short the dollar, and then what happens? The dollar gets stronger. It's just okay, whatever. Maybe it's just a coincidence. Okay, but you know what? So yesterday, my buddy, I might call him my buddy now. I mean, he doesn't really know me, but we talked on LinkedIn a little bit. There's this guy, he's a trader, and he makes some really great posts, I have to say. And he loves the Paul Tudor Jones documentary. Have you guys seen the Paul Tudor Jones documentary? So it was like a CBS or PBS special report where they followed his hedge fund and they talked about what goes on at a hedge fund and trading and stuff. It was really interesting to watch because most of the documentary was basically him being stuck in positions and, there not being enough liquidity in the market to fill his orders, and him yelling at the traders, trying to get his fills. Right? And, but here's the thing that I found really interesting about it. So after that documentary was posted, it didn't really take off, and Paul Tudor Jones basically took it out of the market. They didn't sell very many copies of the video. Yep, Trader 1987. They didn't sell very many copies of the video, and they took them all off the market. So it's really hard to get your hands on it, but I was able to find it on YouTube, in fact. So I watched it on YouTube, and so people were all saying, well, why did he want to get rid of the documentary? Did it reveal something about his strategy or something? And I'm watching it, I didn't see that. In fact, a lot of what I saw was them gambling and making decisions on things that we've learned since the time that he was trading aren't good ways to trade. I think that he took it off because he was embarrassed, because the whole documentary, they were basically saying, well, this is doing the exact same thing that it did after the Great Depression, or before the Great Depression, or whatever the deal is. And so pretty soon here, we're going to see a really significant decline in the markets and stuff like that, right? And he was making trades on these trades, but it was The trades that he was making were more fundamental based. It was like, there's something happening in oil. I don't believe that news story. I'm trading against it, right? The bigger trade that they were making that was primarily based off of technical analysis was wrong. They were calling for this decline in 1987. It never happened. He was dead wrong. And I think that's why they wanted it taken off, was because he was embarrassed by how bad his call was. He probably was like, oh man, that was like the worst call of my career, and I still made money. This is probably what he was thinking. Am I wrong? Have you seen it? Actually, you've seen it. Do you disagree with my analysis there? Because I know that's like a hot take, having seen it once, but I was wondering what Martin was like, why he liked that so much. Because to me, it was like they got the psychological aspects of it for sure, but like the understanding of the markets and the types of trades to take, I was kind of like, He was depicting everything he had started to warn and proselytize against, like ego, etc. in the early 90s, so it didn't gel well with the marketing persona. Yeah, because he doesn't seem like he is the in control, calm person there, was it? Like, he is incredibly nervous through the whole thing. Yeah, I think so. Like, some people were saying maybe a review revealed their strategy. I don't think so. Because what was his strategy? He was, or at least the things that in the documentary that made him money were, he understood the market and he knew what the news was and he was making trades. Okay, so this has now gone as much in my favor. Not quite as much in my favor as it did go against my favor, but we are going into single prints. So the first step is still 23.5, right? Just a little hop away. Their whole research was an overlaid graph printout of the S&P on the Dow Jones Industrial Average from the early 30s and the breakdown of the 200-day. Yeah, exactly. Exactly. I was like, that's your strategy? But you know what? Back then, that was happening stuff. Back then, having the computer ability to do that sort of overlay was the thing. This is what I find so interesting about retail traders these days, is like, we have the programming and the ability to do it. So what retail traders are doing now is basically just retreading what happened in the 80s. I think I will take a profit here if I can. Thanks. Because I don't want to be in during the factory orders. And I risked 40 to make 40. What a day though, huh? I feel a little relieved to be out of that, to be honest with you. I mean, maybe it's going to be like yesterday where I get super FOMO as it continues moving up and they do get 23.5 and then they bust through that and they go to 28, and this could have been a $70 to $100 trade or something. $70 to $100 trade. But I feel pretty good about what I got there. In fact, yeah. Okay, so here's the numbers. Factory orders, -1 versus an expected spot 2. Durable goods revised, spot 2 versus spot 3. That's maybe conducive to the trend continuing. So it's not really reacting a whole lot off of it, but I am kind of thinking they could continue up here. It does look like they're going to touch 23.5, right? Although there is a lot of volume starting to trade up here too. So when I see that, that kind of makes me think pop, and then they'll come back and settle back into that. I mean, in a way, that was what Ed Thorpe was doing in the 70s at his fund, Princeton Newport, before Start Art became popular in general population after access to computers. Oh, that's a good point. Yeah, it's like maybe the technical analysis thing worked, and if only because there was some big players doing it. But then when they all moved to statistical arbitrage, it kind of ruined all that, didn't it? We're almost back to where we started before the news in ES. Yeah, that's really interesting, isn't it? And the treasury's just running. So how much did so let's track how much I left on the table to you know, so that we can complain about how FOMO we feel, right? Let's see here. Oh, my jigsaw thing kind of broke. I have to remake it. Oh, that means I can't see it, but I was in at 25. So 5 minus 4 means that I got out at around 21.5, 215. So it looks like maybe there was another 10, 20 bucks in it. Well, so far it's doing what I thought though, right? It was like there's some volume trading there. They're going to pop and come back to the hole. It did that. So we could try taking a position here. Although if we do, we're at risk of, you know, it settling back into a hole. At the same time, we did just have news, so I think that there could be some orders coming through here, and that might continue to push us. By the way, whoever it was that was shorting the treasuries here after the news and pushed us down to the lows, screw you. Seriously. That was such a bad play. And they pushed it hard. And then the market goes the other way. Well, good grief. Yeah, look at it go. 25, so 19 would have been 60 bucks. How proud should I be? I'm still going to mark it down as an average trade. It's going to be one of those trades that I remember for a long time. Remembering that trade could be to my detriment because it's going to make me want to hold on even when I'm wrong. But yeah, I sold the yields. I sold the yields. I took 50. I took 40, 50 ticks of adverse excursion, held through the whole thing, and it came back, and when it got to 40 ticks, I got out so that I didn't have to hold through the news. So I think it's pretty good. Yeah, I think it's pretty good. But I did, because it was 20. So if I got in at 25 and I got out at 40, that means that I got out at 3.21, right? So it's about 15, 20 bucks I left on the table so far. I know exactly what you're thinking, Akshay. I know exactly what you're thinking. Because it was probably Goldman, don't you think? I think it was probably Goldman. I have a theory on who did it. Saying screw you to them is hilarious. It is funny. Okay, so no, you don't think it was them? Oh, okay. I don't know. So the Goldman play, from at least what information we had publicly, was that they thought that it was going to be a little bit above consensus, and that those numbers being higher would support the 75 basis point hike and you sell the treasuries. So when that happened, I kind of thought that they were just running straight off of their game plan and ignoring that the unemployment ticked up and the hourly earnings ticked down. So I thought it was Goldman, but I don't know. Who was it then? Who do you think it was then that makes that funny? I have to know now. Come on. This is the funnest part of trading is thinking about this stuff. Like, what was it? Was it yesterday? Yeah, it was yesterday. Oh man, I think that yesterday JP Morgan traders got savaged. Actually, that one is particularly funny because basically JP Morgan gave up on the trade and puked it a day before it turns around. Isn't that exactly what happened? It was one of the central banks who released their foreign holdings data early morning today, and it was a drop of 34 billion USD equivalent. Good luck on the goose chase. Oh man, Akshay. That's a goose chase that not sure I even know where to begin trying to chase. Oh man. Where did I get in again? 3.250. So 20 was 50. That's 45. I got 41. So we took 09. Well, I think we should still keep an eye on that 18.5 because that's previous day's high. I'm not going to say that it gives you a probability of predicting that it's going to continue or it's going to reverse or anything like that, but there's probably going to be activity if we get back there, right? And then he retracts the message so that nobody else can see that. Okay, so if it was like another central bank, doesn't that mean that they made a really bad play? Like that's the thing, is that the market did exactly the wrong thing, right? Wait, what was unexplained in yields? Well, so let's walk you through. Let's go on a journey of what Seth went through to this morning, okay? So, news comes out. Market expectation for non-farms was 300K, and we got 315. Okay. So, like I said, Goldman and many other people were saying that, 300 wouldn't be terrible, but it probably would mean that 75 basis point hike is still very much on the table and very likely to happen, right? And so it came out, and we were kind of in this area, this tick right here, this little area right here. Oops, what the heck is with that? My pen screwed up there. Okay. I got in there, right? So like I got in, it was kind of coming back up in here. And so I was like, oh, I got to get in. And then they immediately went the other way. It was like clockwork. It was like they were trying to scare me out of the position. It was like if somebody else was sitting there and being like, well, how can we screw Seth over today? Okay. They wouldn't have done anything any differently. Okay. So let's just say for fun that they decided to try and screw me over. Okay. So it came through here. It broke. I was feeling the pain. I was down $40. Now, I said to myself, based on the way this is trading, this still looks very illiquid. So, and this market seems to be a little bit more two-way than it's been recently. But not only that, but I felt very confident in my call on the economic numbers, that the unemployment rate dropping and average hourly earnings not being as high as expected were very positive developments, and it significantly decreased the pressure on central banks to have to raise aggressively. I felt very, very confident in that call. So I held on. It really sucked. It was one of the most nervous I had ever been. I thought that I was going to go into full tilt, and it came back, and I held it. Now, when this came back, I was thinking about taking it off, and I didn't, and then we got this. Now I missed a little bit at the top, but I'm still pretty happy with where I took my profits. Could that be they just cashing out? Usually central banks don't go speculative. Yeah, but why would you do it immediately after non-farms? That doesn't make much sense. You know, you would want to do it before non-farms, or wait until the liquidity recovers or something like that, you know? Like, what they should have done is they should have waited, and then they could have been selling it all, you know, up here at these much higher prices with much better liquidity too, frankly. Okay, well, they did drop back below previous day's high. And it's kind of given me this look like we're gonna flirt with this price a ton to mess people up. Post non-farms was just a reaction. Probably they were doing 2 whole night in bits and pieces. Okay, yeah. Maybe it could have been like, because I mean, that dip that happened wasn't until what? When did that happen? 15 minutes. It basically happened 15 minutes afterwards. So maybe you're right. Maybe it was like they needed to sell, and so they waited 15 minutes and then sold it. And then everybody thought, oh no, this means that the news was actually really bad. Is there a free resource you can recommend to learn trading ZBNZN? Yeah, my YouTube channel. So I have a video, two videos about trading the treasuries that kind of give you the basics. Now, my video is really more geared towards trading micro treasury yield futures, but it's the same thing. It's the same thing. And the first video just kind of gives you the basics. It explains why trading treasuries is so great. Yeah. The other video talks about how to follow the Federal Reserve. Now, I have another video that will probably be 3 weeks from now. That will be a little bit more like macroeconomics. So how do we make a call like the call that I just made, right? How did I know that those numbers were probably going to push the treasuries up in the end with enough conviction to hold such an adverse excursion? Like, geez. Then I also, Mustafa, I also have a video series about order flow. It's about like 4 or 5 videos. And I go into some pretty advanced order flow stuff. Like, I don't go into all of the math behind it, but I teach you some empirical properties of markets that you're not going to find in any other retail education. It really is. I'm not saying this to badmouth anybody else or anything like that, but there is information that they're teaching at the banks and they're teaching at the universities that nobody in the retail space except for me is teaching. And there's about to be a revolution in the markets. I'm telling you, there's about to be a revolution in the markets where traders start to learn and understand the actual science behind liquidity. And it's going to be happening across the board, not just in futures, but in stocks too. And it's going to start next week. This is going to be a big deal. So That's what you should do this weekend, is go watch those videos of mine. I mean, everything, all of the VOD videos that I have are useful. Every single one. I really tried to make it like retail trader can come in, watch every single one of those videos and take something out of it. I'm going to move into more current event stuff soon, so then it will be a little bit different, right? But those playlists will always be there. Here's the education that you want, right? So that's how it would go. Now, if you're going to use Jigsaw, first of all, I got to always know when we talk about Jigsaw, I am an affiliate for Jigsaw, and I have an affiliate link in the video description that gives you $100 off of your purchase. So that really helps the channel. It helps me make better content for you guys. That's what it goes back into. But you know, I always want to disclose that, because there was some people that were saying like, oh yeah, you're with Jigsaw, and I was like, well, of course. I always thought I made it really clear, but so now I try to make it extra abundantly clear that I'm a Jigsaw affiliate, and I really like the software. Okay, but anyways, when you buy Jigsaw, it comes with some education too that's really good, and that I would highly recommend that you watch. That is really helpful things. Very good. By the way, guys, I got something else for you. That I was hoping that if any of you guys on NinjaTrader could maybe help me out with. So I have been working on cleaning up my indicators, and I got a bunch of indicators that were kind of more general things, like they were to help you with the look and feel of your chart, and then the things that I wanted everybody to have, like the range, the statistical distribution chart, right? Some things that have always been available, but I put them all together in one package. So there's a free package that you can download, and I'm not ready to, like, this isn't necessarily public, but it's not like it's a big deal that, you know, anybody using it. So if you go to the link that I just posted here in chat, speculatorseth.com/free.html, you can go, if you have to sign up for the mailing list. So you put your email in there, and then you can download, it should give you a link to download the free NinjaTrader pack. So if any of you guys are out there on NinjaTrader, you want to test that out for me, I would really appreciate it. Do you have a discount with TickTick? No, I'm not actually, I'm sure if I'm familiar with that. Is that one of those like packages that does the auditory stuff? No, that's TickStrike. I'm not sure what that is. Oh, it's a funded traders program. Yeah. No, so for a while I used to have an affiliate link for funded trader programs, but I started to see things from the funded trader programs that I really didn't like, and so I made the decision that I just wasn't going to do that anymore. I'm sure that I'm probably giving up a lot by not, because man, people love to do the funded trader programs, but now that we have micro yield futures, I mean, look at this. Look at this. I really let them go against me. Okay, I got in at like 07. I mean, this was the sim side of it. I did a live trade over here, but this was the sim side of it. I let them go all that much against me, and then come through here, right? All of that against me. If I had really decided to puke down there, would still have only been a $50 loss, right? So when it's like that, why do you need funded trader programs, right? Just fund an account. That's how I go. I think fund an account, trade micro yield futures, and just trade as small as possible and give yourself as long as possible, because it's not going to be like you just started and then you go and you do the funded trader program and you make it and then you're a trader. That's not the way that it happens for most people. that actually get good at it. The people that actually get good at it are the people that are able to keep things under control so that they can trade for years and years and years and years until they get good at it. I've been doing this now in the treasuries for 5 years. You know? Because they provide the software, which is not cheap. Well, that's fair. That is a fair contention. Like there's a free version of NinjaTrader, but you can't trade from that, right? You can just buy Jigsaw, but that's to execute with Jigsaw, that's $50 a month. There are a couple of options though that are cheaper. So like if you do Iron Beam Capital, they have a web-based platform that you basically get for free as, you know, trading with them as your broker. And that's, I think, is a really good option. Sierra Charts is a little cheaper than some of the others. I think it's like $20-$30 depending on which package you use for that, you know, per month. Also, most brokers do have at least one platform. And it kind of changes which platform it is, but you know, they usually have a platform that's free for being part of their brokerage. So you can do those as well. But I like to say, like, you know, start out with $2,000, put 500 of it into the trading software and just trade sim for a year or something like that. That's basically what I did. My first like, I want to say that my first like 5 accounts were $500 accounts. I'd trade the $500 until I blew it and then start over again. Or I'd go until I was close to blowing it and then just only trade it on sim for several months until I felt comfortable doing it again. AMP futures have a lot, but all the free ones are rubbish. You know, there's only one platform that I really feel like sucks, and that's MetaTrader. I really hate MetaTrader. I'm probably a little bit too biased against it because the software is not that terrible, but it's just like, it's not very good software, and they have like that app store in it that is just like a nest for bullshit. Most every broker will provide you with a white labeled CQG front end if they provide CQG data. Yep, there you go. Anyways, all of the other platforms, I think that they have something going for them and are at least acceptable to trade with. I think that the reality is, like, I really love Jigsaw, and you know why I love Jigsaw? Because it's the best. If you want a DOM, it's the best. Nothing comes even close to it. Yeah, Sierra Charts gets you most of the functionality for cheaper, but it's still not as good. It's still not as good. But do you actually need the best to make money in the market? No, actually you don't. Because the, you know, of course you want to be able to see the current liquidity conditions and everything, right? But there's lots of different ways to see that. You don't really need something that elaborate to see it. And it's the informational inefficiencies that make me money, at least, right? This trade that I made today, I mean, look, the liquidity was a part of it, but ultimately the trade was average hourly earnings was down, unemployment was up. This is good for stocks, and it will probably cause interest rates to decline. And I stuck to my guns, and I was right. And that was the trade, right? What a day. When I started, so one of the things when at the lows, you know, what was going through my mind at the lows was like, I made a TikTok yesterday kind of giving a preview for the non-farms, and I said, you know, all these are really hard to predict, and the last thing you want to do is take a big loss going into the weekend. And so I'm looking there at like minus 50, and I'm like, well, I can handle that. It's okay. But do I really want to take a bigger loss than 50 going into the weekend? No, I don't. I really just want to puke this. And luckily, you know, it turned around very quickly at that point, and so I just kind of stuck with it. That's what I was thinking, man. That's what I was thinking. Was I don't want to take a $50 loss going into the weekend. It's just going to ruin my whole weekend. Now I'm feeling pretty hot. Now I'm like, oh yeah, let's go. Go time. I got some indicator stuff to clean up this weekend because I'm putting some stuff out on Tuesday. Hopefully it's Tuesday. It might be later than that. I can't tell you how excited I am about this thing. This next video that's coming out could be a big deal. It's going to be one of those videos that like you're going to be tempted to just keep it to yourself. You're going to be like, no, I don't want to share this with everybody because this is like such a big deal. But the reality is that it's such a big deal that it's just, you're not going to be able to keep it under wraps. So, yeah, we're going to put it out there, and it's going to change a lot of people's trading, I think. I really do. Am I overhyping it? I don't know if I can overhype it. It's just, I think it's a really big deal. I guess it's not like, because it's kind of something that's been around. It's just like not been prominent, but I think that this could be the thing that really starts to turn the tide. Like I said, I really think you're going to see a change here in the markets where retail traders really start to understand and take advantage of the science behind liquidity is what's going to happen. And it's going to be a big deal. I really hope. Maybe I'm being really naive here, and this video is just going to totally bomb. But I really hope that this means that like there's a lot less people blabbing on about technical analysis and actually starting to talk about liquidity, you know? I think it's going to be a big deal. We still have 30 minutes left. Well, we had a poll about Dark Brandon. How did that go? Only 6 votes and they were all yes? Man, guys. That's not the result I expected. Where was that? Let's see here. I kind of wonder if it's like more complicated than, so like the whole thing was that the background behind him was red. And like they're like, oh, they're going with Dark Brandon. Here it is. Here's the picture. Open image in new tab. Like freaking look at this, man. Was it on purpose? I feel like that had to be on purpose. But like, I don't know. Terrible optics, obviously. That picture. But maybe it might not matter, right? Democrats aren't going to look at it that way. And I think that Joe Biden, it does seem to be hitting on something that his base, at least, is very, very interested in, right? His base is very, very concerned about MAGA and all that sort of stuff, right? I feel like it's a kind of a cynical play on the elections, but it may help him. We will be really interested to see what the polling this morning and then next week is going to come out and say about what the public thought about his speech. But for the purposes of this stream, not to get too political, but I think that it's a very valuable teaching opportunity, right? A really valuable teaching opportunity for Seth, really, because let's be honest, I'm a little combative most of the time, right? Like I know this thing, but I don't always do it. Kid's coming in to get some papers here. I kind of like the ambient here better than the dubstep. You know, we had the dubstep on when that position was going against me, and maybe it made it more stressful than it needed to be. And Treasury's kind of given me these hints that they're just going to be, that they're just going to settle here. hasn't moved a whole lot after being at 17. Maybe they really are done. I mean, it's a holiday weekend, so given what I'm seeing, that's got to be the most likely case, but something still gets kind of nagging at me like, oh, they're going to keep going later. I'm waiting for my family to leave. They're picking something up. Tobias says, thanks for sharing. Oh, you're talking about the free indicators? Yeah, so if you guys do the free indicators, send me a message back on like Discord or speculatorSeth@protonmail.com and tell me what you think of what was it, because I'm like have no documentation, and I think I still need to like put descriptors on all the properties and stuff like that. So there's a little bit of work to do with it, but there's some stuff in there. The one that I really am proud of is the watermark. Because other people have put watermarks out for NinjaTrader, but they had issues, and I was able to solve the issues with the watermark. So I'm really proud of the watermark one. And it's another one of those like, why isn't this included in NinjaTrader? You know what I mean? Yeah, there's a child. What are you doing, Abby? You're looking for what? The stapler will be in the bottom of the hutch in the little drawers on the right side. No. Like that mean, yeah, right there. And then on the right side, probably the top one. See, I know where everything is. Oh, now that's interesting. The lone comic is one of my followers on Twitter. Responded back to my response on Future Trader 71's thread about markets not being efficient. It says, reminds me of that James Dalton quote, markets aren't very efficient, but they're effective. Well, they're the most effective system that we have, at least. Anyways, I think it's a teaching opportunity because, guys, like, teamwork is a really important part. This stream wouldn't be where it is today without teamwork. I really need to spend more time thinking about how do I better get you guys involved, right? Because I really feel like, especially you guys in chat that are here every day, really provide a lot of value to the stream, and it's the teamwork that we have together that really makes this stream something special, you know? Teamwork. And it's kind of funny, maybe it's just because I'm hyper focused on this thing, like I'm being ADHD about it, but I've got this thing. It's integrity, excellence, teamwork, and everywhere I look I see that people don't value those things. People don't want to be excellent. People don't want to have integrity. Oh, the integrity is crazy. It's just like, you would think that it would be a simple thing to say, yeah, you should have integrity, which is more than just like don't lie. I mean, that, like, at the basic levels, don't lie, but really it's more than that. It's like, you need to be trustworthy. You're not going to give people information that will lead them astray or be bad. So integrity is also like, I've got to do my extra homework, verify what I'm saying, that sort of a thing, right? You'd think that would be a simple thing, but apparently it's not. People all over the place are encouraging you to just try and get as much money from other people as you can by saying whatever you can possibly say. Win by any means necessary. I love being excellent. Good NASDAQ killer. You know, for you, because I know that you've talked about being a little autistic before. I think that excellence is something that can really benefit a person with autism. That doesn't mean become a perfectionist or become obsessed or anything, but really taking pride in taking that time to do things well and to try and have, you know, a exceptional quality about your work that makes it stand out. I think is really valuable. Really valuable for somebody with ADHD, I think. I think that's what sets me apart from other people with ADHD, was that I always had that mindset of excellence ingrained into me. I think a lot of ADHD people, it's hard, and so they just kind of become, whatever. They become carefree about it. But that's the thing, is a lot of people, they don't want to be excellent because they feel like that make them uptight. Am I uptight? I am uptight a lot of the time, but we can still have fun too when we want to, right? But teamwork. It seems to me like teamwork is the most difficult one. Thanks, I wish you the very best. Thank you, Nasdaq. It seems to me that teamwork is the hard one. Like, we know what excellence and integrity means once we've discussed it. Teamwork is like a much larger subject, because teamwork is not just something where you can just do one thing on your own, and, you know, teamwork is, you've got to work with other people. You've got to learn to understand other people, which is hard in and of itself. And you have to suppress your own impulses to be mean to other people, which is very, very difficult for me. You know, I just want to disagree with people, right? You're very cool. Oh, I don't know if I'm very cool, but I appreciate the brown nosing anyways. No, and like, how do you actually foster teamwork in a group, in a team and stuff is an interesting question. I think I need to find some good books about it. Books about teamwork. I'm especially thinking, how do I foster teamwork amongst the family? Because the two babies, they're gonna learn this stuff. The older ones, I'm trying, and I'm going from an intellectual level with them, and it's going to be interesting to see how it turns out. You know, it was one that came up yesterday that I thought was an interesting conversation. Was like, you know, people always make a big deal over a study that suggests that, like, Republicans or Democrats tend to be smarter than the other party, right? Like, right now, it's very much the case that the Democrats are the more educated ones, right? Like, all the tech people and all of the academia people are Democrats, overwhelmingly so, right? So I think people want to say to themselves, well, it's because they're smarter, that's why they support Democrats, right? But experience has kind of told me that that's usually a delusion, right? People make their decisions based on what's beneficial to them. So if you're in academia, Democrat policy is more favorable to you because they're basically giving you free money with their student loans, right? So it might not be what's best for society. It might not be the best policy overall, but if you're in academia, it's beneficial to you. And so you're likely to support the Democrat Party and then come up with the reasons for why you support them afterwards. That's usually the way that things go, right? It's not very conducive to teamwork to focus on who's smarter, does it? Because in the end, who's smarter doesn't really determine who contributes the most or who's the most valuable. The person that's the most valuable is the person that makes everybody around them better. I mean, being smart helps in that respect, but it really has a lot more to do with how you treat other people. And if you're smart and you treat other people like they're beneath you, which I think I have a tendency to do, that's not going to be very conducive towards teamwork, is it? They made a little bit of an excursion there down towards the bottom at 16, and then they flipped back up very hard. And I'm kind of wondering if that was like a false breakout and that they're going to push it to another new high. Read the Anguish of Central Banking by what? That is a weird, oh, it is a St. Louis Fed paper written in 1987. Arthur F. Burns, who died on June 26, 1987, was chairman of the Board of Governors of the Federal Reserve System from 1970 to 1978. The following article is a reprint of the address Dr. Burns gave as the 16th Per Jacobson lecture at Belgrade, Yugoslavia on September 30th, 1979. The Federal Reserve reprints the lecture as a memorial to Dr. Burns. You just need clout? Oh, I've been thinking about this a lot, NASDAQ killer, and I just keep coming back to the, like, I guess I don't actually care. But it seems to me that short form content in particular really gives an advantage to people that has something interesting about the way that they look, and that can gather attention within the first second of something. And you know, especially when we're talking about a subject that's maybe boring to a lot of people, like it's really hard to catch people's attention with like, here's how liquidity works. Although I've been really effective at it, or at least I've been more successful at it than I've ever thought I would be on TikTok. But you know, how do you get to that next level where you can really take advantage of that and get clout? I don't really know. You know, if I was a hot chick, then I could just, you know, I could maybe have plenty of ideas about how I could maybe dress and stuff to get people's attention, right? And still be serious central banking and stuff. But I don't know what to do. I don't know what to do, because it's like I could go and get like really nice clothes and everything. Most people wouldn't notice or care because I'm a guy. I'm really interested now why Akshay recommended this article to me. It's not that big. So it's only like, what, 10 pages? 12 pages? The conservative trend that now appears to be underway in many of the industrial democracies will gather strength, and unless political leadership falls into irresponsible hands, the inflationary bias that has been sapping the economy and moral vitality of the democracies can finally be routed. Hot girls, I find myself watching beautiful women on YouTube for hours without... Yeah, me too. What I don't understand is like there's some creators on TikTok that like you really feel like a supporter. Like there are some even girls on TikTok that I really feel like I'm a supporter. Like I really like that creator for whatever reason. And I'm sitting there and I'm like, well, their videos are not actually that different from any other e-girl. What is it that I like about them? I can't figure it out. Those 12 pages taught me more about working in a team and compromises than every book that my job recommended. Really? Now I'm really excited to read it. That's got to be my next. I mean, I've got a lot of work to do, right? I'm halfway through this book. I've been sick, and so I've kind of been taking a rest, and I didn't read a whole lot. Otherwise, maybe I would be done with this book by now. And I didn't study any this week either. Last week I was maybe a little bit too hardcore, and maybe that helped me get sick. I don't know. Well, I'll have time to do that this weekend, and I can finish that, and then we'll be able to pick up other things. Although I think that the next thing I need to pick up is that machine learning book. Yeah. You can dress as a man, but what would it be? Drop that and start the Stigum book. Oh yeah, I got that right here. You were talking about the calculations one specifically, right? Because, you know, I skimmed through it and I was like, I think I'm going to learn a lot from reading this, but I don't know if it's going to be anything that's like directly pertinent to me. But I am going to read it. It does look interesting to me. There's not enough time, man. I could, if I could make a career of just reading books and making videos, I would do it. Because the reality is that finance is just such a huge topic. and where I am in my position, I really am in a weird position. There was this argument yesterday. You know the whole thing about Amazon is making this Lord of the Rings video or series, and a lot of Lord of the Ring fans are already seeing things about it that they don't like, and you know, all that sort of stuff, and they don't like what they're hearing about it in the reviews already. Like already it's sounding really bad for Amazon. Well, some people were talking about this and they were saying, well, my theory about why all of this is happening and why we keep getting stories like this is because people don't have enough life experience to make interesting stories anymore. That life is so comfortable that they're not interesting anymore. So I kind of started thinking about that, and I was like, well, if I look at my life right now, I wake up, I trade, I work, I stop working, I work out, I eat dinner, clean the house up, and go to sleep. And I don't really do a whole lot of anything interesting, right? But for a lot of people, I'm realizing that for a lot of people, that's been their whole life, you know? I at least had opportunities to do things like serve an LDS mission, go to New York and work for Goldman, and all of the things that I learned from doing that. All of the stuff that I did in the rave scene, and day trading, which is a really, really interesting journey. You know, I'm actually maybe have some life experience that is actually quite unique, and that most people don't have the opportunities to do all of those things. It was really weird to think about. All of a sudden to think, me getting here in this old age, I actually have a lot to share. Because in my mind, I'm still just a regular person. I don't think that there's really anything that special about me. I'm average height, average looks, unusually thin build, and very low agreeableness, and that's about it. But then you look at the experience and everything, you go, actually, no, this guy actually has done some interesting things. Compared to a lot of people, at least. Would that make me a good story writer? Probably I wouldn't be a good story writer. Anyways. As I recall, post 2013-2014 storytelling took out the journey of getting the quote powers. Most everything I've seen after that, the protagonist gets everything easy, he or she wills it, and it happens, and there's no struggle. That is a force, but I think that the problem is actually deeper than that. I think that so here's what I see. Have you ever seen this whole thing that it's like all of the Marvel movies post Endgame have the same storyline? They all have the same storyline. It's like there's a woman and she does something, and the woman might not even be the good person, they're the bad person, and then like it turns out that actually they were just being manipulated by the real bad guy. And who's the real bad guy? Elon Musk. It's always some rich white guy, right? Every freaking movie. Every freaking movie. It seems like in the Marvel story, it's like they're telling the same story over and over again, right? That's why this whole thing that is like, well, maybe it's because people lack relevant experience, is, you know, there needs to be like an emotional, you know, it feels some emotional need in them. And because we don't have conflict, it's like what people think about feminism is like the only thing that they've got. You know, that's the only conflict in their life. And so everything is just that playing out over and over again, even though that's not really a thing, you know? And so it's not that there's no struggle. It's that the morals of the story don't actually make sense, right? Because the hero's journey is basically like, you've got to work hard and things won't just be handed to you. That's what that really is about. And that there's going to be struggles along the way, right? Storytelling is how humans relate experience to each other. That's the thing that has kind of like our ability to pass information on to future generations is really the thing that starts to set us apart from the rest of the animal world, is that we've basically built civilization, which is a way for us to transfer culture and values and ideas across people and generations, right? So that makes storytelling a very valuable thing. And the main archetypes that you get for storytelling exist because those are the most key lessons that we've learned that brought mankind to where it was, right? Our natural inclination is to just play it easy and, you know, just be lazy. And what every hero's journey tells us is that you work hard. Yeah, it's not all going to work out at the very first, but you stick with it and you do what you know you're supposed to do, right? That's what it is. And now the stories, they don't actually make sense. What they're trying to teach us doesn't actually make sense. What are they trying to teach us? That it's always everything that goes wrong, there's always an evil white guy behind it. You know? That seems like the story that they're kind of telling, because then after that, like, where does it go from there? What did you learn from it? What is it that you maybe think about differently because you were told that story? Right? That's why I think it has a problem. It's because the stories don't make sense. I think that movies in the 80s and 90s are more compelling. There's more to get from them. U.S. factory orders dropped sharply in July. Is that what's causing the bounce? Well, so let's go back and look at that, because I don't recall the factory orders being that big of a deal. So you're right, it was negative spot 1 versus spot 2. I wouldn't consider that like a huge deal, but I think that generally speaking that the market is probably more likely just bouncing around as aftermath of the non-farms, right? You know, strangely enough, the factory orders move did cause a little bit of extension on the treasuries, a stop run, and since then they've kind of been dead. So most famous YouTubers are edgy and very nasty or very hot gangsters and stuff that we get away with not being. Oh, I don't know if that's true. Like that's not true about Mr. Beast, who's probably the most famous YouTuber at this point, right? So how did he get so famous? Well, he had other things going for him. Unfortunately, the things that Mr. Beast has going for him, I'm not so sure would be things that would really help Seth. But it was okay. I don't need them because, again, we have very, very good content on this channel. You have everything that you need now. And I think that we have a video next week that's going to really change the trading world. and then people are going to come and learn all this stuff about order flow, and I think that there's going to be a big change in markets. Oh, you're not familiar with Mr. Beast? Yeah, he's like the most famous YouTuber right now. I think the most recent big thing that he did was he made a game show like Squid Game, basically. Except for that you don't actually die, but he did a game show where there's like 1,000 people or 1,000 contestants, and the winner gets $1 million or something. Yeah, these treasuries keep kind of like coming up to the upside and like threatening like they're gonna bust out, and then it just settles back into the hole. I just clicked and he made a loud roaring scream with his mouth loud. Yeah. Like the thing is that the thing that gathers him attention is like, I gave $1 million to a homeless man. I think that was the first thing that really blew him up, right? They know how to do the kind of like the sensationalism that really attracts people to it. He's not like an influencer on a specific subject, right? I think that probably a better analog for me would probably be more somebody like Joe Rogan. Like Joe Rogan is everything now, but the reality is that what started Joe Rogan was fitness in UFC, right? People started watching him for fitness in UFC, and then he kind of branched out into other things like politics and stuff. That's probably a better roadmap for, you know, if I ever go really big, that's how it would happen. But I don't think that I necessarily go really big. I just think that we're gonna have an impact on how retail trading is done. I think that it's like we've been doing this order flow stuff for a long time. Most retail traders don't know about it, and pretty soon the cat's gonna be out of the bag and everybody's gonna be studying this stuff. Well, I'm still kind of recovering from all of that. I feel some peace, but what a day. Let's not do that again for a while, huh? Big 40 tick drawdown. Let's not do that for a while, all right? But it's time for me to go. 3-day weekend. I will not be here on Monday. I'm just gonna take the day and I'm gonna be working hard. Studying, probably mostly studying that day. Maybe some programming, maybe some Vim. So I will see you guys on Tuesday, right? And then the video, they're still kind of working something out on their side, so it might not be guaranteed Tuesday, but that's where we're working towards. So I will see you guys later. In the meantime, stay excellent, team.